Good morning. Welcome to Lahti. I think it's time to begin the show. This is Corporate Cleantech Venture Day. My name is Niina Harjula. Today we are hosting the 8th Cleantech Venture Day. It has truly become an international event. We have people here today from over 23 different countries. We're going to hear over 20 companies pitching in front of the audience. There were many more applying, and there's many more, 3-4 times more companies here today. So I hope you take your time during the breaks to meet them. This morning we had speed dating. I think there were almost 400 short meetings and introductions there. It's quite an interesting event. Today we're also inviting 43 speakers on the floor. It's quite a number. The team behind all these organizations, especially towards the end of the event, is always growing, but also the partners supporting us is a number of growing. And there's so many people, there's so many organizations helping us and supporting us that I'm not going to give all the names, but the people, you're here and you know who you are, and this comes from my heart when I say thank you. I know that there are some first-timers here, so I will very shortly explain the company Ladec that I represent and who's behind this event. So Lahti Region Development, Ladec, formerly Lahti Science and Business Park, known by some of you, is a regional development agency, and we have been for a very long time focusing on clean tech and industrial design. Today, especially for clean tech. And because of this very clear focus that the city of Lahti has also had, we were nominated as the coordinator of the Finnish Clean Tech Cluster when the ministry started this excellency program. This program is coming to an end this year, but us as the coordinator, I think our actions and our best practices will go on. From the beginning, we decided that two things as a national coordinator, we wanted to focus on two things. The other one was facilitating clean tech venture network and attracting investors to Finland and finance. And the other thing was internationalization, because Finland is a very small country, so the home market is small, and the companies are very fast in a situation where they need to internationalize. So we built programs and expertise, especially in Russia market and Chinese market. And that's one of the reasons I think that Lahti is one of the co-founders of Global Clean Tech Cluster Association, is that we took it in a very early time, this internationalization focus. So I think these best practices will go on without any mandate, and we will keep on doing that work. For the last weeks, I've been reading the media and the news, TV in Finland, and I started thinking that we had a training day yesterday for the companies, and I thought maybe I have to go and buy hoodies or sweatshirts for all the entrepreneurs so that they can attract investors. But then I thought maybe not. You know, as long as they don't teach the angry birds how to solve the water, waste, or energy problems in this world, I think we are also needed just as we are. Of course, they're clever birds, so you never know what they learn. But the event is growing, and at the same time, we're not searching for quantity, we're searching for quality. I want to share a compliment that I received last week. One of the, I would say, serial Venture Day visitor said to me, not exact words, but he said that the best thing about this event is that it has all the essential things to accelerate clean tech investments. And what's more important, nothing but the essential things. I think we want to keep it that way. For the last 2 months, some people have been asking me, are we going to change the whole concept? We're talking about Corporate Clean Tech Venture Day. So is it going to be in the future always like that? I don't know, I think corporates are going to be an important, essential part of Clean Tech Venture Day in the future, but maybe not in such big way. But I do think that there was a momentum to organize this event which focuses on corporate venturing in clean tech and everything that's happening around it today. We have done some homework and we have published a report called Snapshot of Nordic Clean Tech Corporate Venturing. It's almost hot, fresh from the printing house, and you can get your copy from the registration desk. We are also very thrilled today about launching a collaboration with Veolia. I would say it is a brave launch. It's brave and great because it's a pilot, and what's great about it is that both Veolia and us, we are doing something new, so we know it's going to be a learning experience. We don't get it right maybe immediately, but we want to do it, and we want to find if this kind of technology scouting and collaboration could be localized partly with local partners for global corporations. You will hear more about that in today's seminars. All in all, today we have some pioneer corporations here as our partners and on stage, and many more participating. And today we aim at challenging you all to think what is needed to push the play button and to make things happen. Another very special thing about today's event is that we are hosting the annual meeting and award ceremonies of Global Clean Tech Cluster Association. And it happens that almost exactly 3 years ago, in November 2010, in this same building, we had the first ever official meeting of this association. We started with 2-3 clusters. In the first meeting, we had 10-20 pilot clusters interested. Now I'm very happy to announce we have the 50th cluster joining the GCCA, and they come from China. Wonderful news. I will not keep you longer because I can't wait to get the seminar started. I think the program really is dazzling today. Thank you for coming. I hope you enjoy the day.
For being here. Let's give Nina a round of applause and her team for organizing all of this. So today we're going to talk about world leaders striving for faster clean tech deployment. And in this session, we're going to explore how the clean tech community can engage pension funds and sovereign wealth funds to drive low carbon, climate resistance, and sustainable growth. And to get us started on this topic, Christian Hauselmann is going to give us our first keynote on this topic. So Chris, take it away.
Yeah, thank you very much, and I'm very excited to be here, and welcome this morning to this beautiful conference that you set up. Thank you so much, Nina and your team. Nina mentioned it's really also for me a little bit a historic moment. We really, 3 years ago, were here and launched the GCCA with the vision to making local clusters global. And I will give you a little bit of background, what is the idea behind it. I thought about this GCCA idea for many years because in Switzerland, we're a small market. We're about 8 million people, so we're a small home market, very similar also to Finland, so we are used to do international collaboration. And with me moving to San Diego in California 10 years ago, I realized that in 2006, there was also Cleantech San Diego was founded. And when I worked together with Cleantech San Diego, I thought about, gosh, what if we would have a global network of clusters where clusters managers actually can learn to know each other, become friends, and we can share information. And I did some research worldwide, and then I actually found Nina, which at that time was responsible for 13 European clusters. And as she mentioned, we invited then, we had an event also with Shawn in New York in June 2010. And this is when we then thought about this idea and said, let's launch this. And we said, okay, how can we do this? And Nina said, well, we have this Venture Day in November. And we said, that's a perfect occasion to actually launch this. So I'm very, very happy to be back here in Lahti. It's always very fun and very productive. So what is the vision of GCCA? It's really, our heroes are the clusters. We fully believe in sustainable regional economic development. And this is really what we want to drive. And we want to provide access to markets, to technologies, and to capital for the clusters, and mainly for the cluster companies, because it's the companies that we care about. And we believe, when we launched it, a lot of people told me, this is never going to work. Why would clusters collaborate? They compete. They compete for local jobs. They compete for local investments. So they never will collaborate. But we always believed that there's this concept of competition. When you know where you compete, you can leave that aside. And when you then see how much you can gain on the collaboration side, you just realize that you can gain so much from each other, and it's kind of raising all the boats. And that we have decided then to have two main services for two main target groups. One target group is the cluster managers. So here it's really the idea to help cluster managers. They're usually there's a very difficult job to run a cluster. It's kind of like a startup. You have a lot of different stakeholder groups. Everyone has other goals that they want to fulfill with you. So it's really to help each other to exchange best practices and kind of a peer-to-peer coaching among friends. And what we do is for the cluster companies, it's really to help them to reach out internationally in a very efficient and effective way. And access to capital is very important. This is why we also launched a later stage award. So we care about how can we bring visibility to these regional companies and bring them in front of investors. Access to markets through the international reach. So if I have a Swiss company that wants to do business in Finland, without Nina's network, it would be very difficult to find the right companies. With this, I can call Nina, and Nina can tell me, I think with this company, you should talk to company X in Finland. So we're very efficient that way. And this leads then to the technology deployment, which I want to expand then just later on. So when we started, we were really Swiss Cleantech, the Finnish Cleantech cluster, so two clusters, and Shawn from Watershed Capital that launched the idea. So we have Atlanta from the US, Switzerland and Finland. And people, when we thought our vision is like to have 50 clusters in 5 years and 10,000 companies, because every cluster on average has 200 member companies, people thought we're a little bit ambitious or a little bit crazy for that matter. But that's kind of usually the spot that I like. I like to see what is possible and what not. When you now look at the map, 3 years later, we have, as Nina said, with the water cluster from China joining as the 50th cluster, we have 50 clusters after 3 years and around 10,000 Cleantech companies. And you see the majority is in Europe and North America, but we're right now reaching out to the south and to the east, because we just didn't have time to go there. We grew so fast. So this year we kind of did a lot of consolidation work, so we're ready for the next phase to come. Today, I'm very excited that we also have Eugene Noon from Korea here with us, because we were, in the last 4 years, we worked on in my opinion, initiative that has the potential to become a historic initiative. And it's called the Global Technology Deployment Initiative by the P80 Group Foundation. And we just yesterday signed the Ladec partnership to formalize this collaboration. So what is this collaboration about? The Global Technology Deployment Initiative has the goal to take proven technologies that are deployed in one market, but are not deployed in another market because either the money is missing or the political will. And who is behind this Little Rock Accord that was signed in December 2012 in Little Rock in Arkansas? So what's important, the lead detail, this is Bill Clinton's hometown. So he is also behind it. So who is behind this? I think it's very interesting. So we have, on one hand, we have the P80 Group Foundation. This is the 80 largest pension funds that come together that want to invest more in sustainability. What that means, we have, for example, one national pension service from Korea, one of the largest ones. I think they have $350 billion under management. And the discussion is if they want to invest 2%, that would be $7 billion. And we can see then there's a lot of money, but also has some challenges. The other partner of this is the Club de Madrid from Spain. The vision there is to bring former presidents together that want to drive social change and sustainable innovation. And there is 93 former presidents that actually are in this group. Actually, 3 presidents of Finland are also in there. So what that means, we have on one hand probably the group representing the most money worldwide, and on the other hand, probably the group with the most power, political power. And we're very excited that we are able to join this effort and support this effort, because we have on one hand the money, the political will, and what we can bring in is like know-how and expertise, what companies and solutions are investable. So that's what we will develop in the coming years to really bring large amounts of capital towards the clean tech field. Now, when you look from a very, very big picture, we have in the financial community kind of 2 mega trends, as I call them. One is on one side the institutional investors with large amounts of money that want to invest more in sustainability. On the pure opposite end, I put it as far as I could apart on the slides, because they're really apart, is the crowdfunding. So bundling like $10, $50, $100, and make them into a project of $10,000 or $100,000. So pure opposite. The question is now, is these 2 megatrends, can they play together? Is it opposite, or is it actually complementary? And I fully believe that they're complementary. Because what I, since many years, always advocate is, beside the technology innovation, we need as much or even more focus on business model and finance innovation. And what we see here is exactly this. The Global Technology Deployment Initiative, they say, we have to define a new financial plumbing system. So on one hand, we have to break down these large chunks of money, disaggregate them in sub-funds and sub-sub-funds to break the billions of dollars down into chunks of maybe 500 million funds. On the other hand, we have to bundle projects that may be 100,000 or 5 million or 10 million and bring them up to an amount, so from thousands to 500 million. I believe when you look at the peer-to-peer lending, I'm very glad that Markus Lampinen from Grow VC is here, a crowdfunding specialist. There we have 5,000 to 7,000 loans. And there's a fund that actually manages 400 million of these little loans. So if you can handle these 5,000 to 7,000 loans, make them a 400 million fund, you just add some zeros on both ends, and you're pretty much there where we have to go. We also have the Keystone Compact. So we know how to evaluate the investability of companies, and we do this every year with the Later Stage Award. And we have the cluster ecosystems. So we have a lot of elements in place. It's just how to build a mechanism to get them all to play together in the future. But I'm very positive. I think this initiative has a truly historic dimension. So just very briefly, to be in time, the challenge is, when you look at the concrete example, a pension fund manager, it's very difficult for him to understand that with a streetlight upgrade, he can make more money and more secure money than with traditional investment vehicles that he can invest today. So it's such far apart from what his daily work is. But when you look at it, you can, with smart streetlights, you can save up to 90% of energy. You can even have health effects. You can use them for mobile communication. You can use them for traffic management. In Los Angeles, they were able to reduce traffic jam by 16% by putting in smart streetlights that measure traffic and then do actually the managing of the red lights. So 16% traffic jam reduction thanks to streetlights. And you have ecological effects as well. When you look then, are there concrete projects out there? We have found LED streetlight upgrade project in planning in Colombia, 120 million. We have Mexico, a project 25 million, and Jamaica, 50 million. Jamaica is especially interesting because there the cost of electricity is 50 cents the kilowatt hour, which means there the business case is even much better because everything is done by diesel generators and diesel. So the challenge is how to bundle and make it investable for pension funds. So this is the overview of the roadmap of GCCA to come to the final. On the upper level, you see what we did in the last 3 years. So this was kind of our 5 to 10 year plan. We thought this is going to take 5 years. After 3 years, we're here already. So we have companies on one hand. We know how to bundle them into clusters and the GCCA, and we know how to evaluate them thanks to the Keystone Compact. So we have this all in place. And now the next thing is when we then have these evaluated companies to bundle them into investable portfolios and kind of make them investable for the pension funds. This is another maybe 3 to 5 years, but I'm very excited that actually here we have very good news. Peter Adrians just can maybe very briefly explain what we have to announce that actually makes this, what we thought takes a long time, very, very tangible and real.
Good morning. Peter Adrians. I'm from the Ross School of Business at the University of Michigan. Thank you, Chris. I'm the head judge also of Global Cleantech Cluster Association. I want to announce that I guess last week we found out that Tekes and Sitra and a number of other entities of Finland research organizations have decided to invest in a 3-year project that we're going to be doing in collaboration with ETLA, the Finnish Economic Research Organization. I believe Antti is here, a number of other entities in Finland, to over the next 3 years design investable portfolios that are related to up to 2,000 companies within the Finnish economy. It's a model that we hope to franchise once we're done with that, but I think there is a lot of potential that helps to fulfill this vision of the GCCA, and Finland is in the leadership position globally on taking the lead in doing this. So again, thank you, and thanks to all the organizations that are supporting this.
Yeah, this is truly exciting news, so thank you so much. And with this, I come to the last slide, because there's a lot of work that has to be done. A lot of will be done behind the scene in closed group meetings, but also we have a series of events coming up where we have actually modules integrated where we will talk about the P80 and the Global Technology Deployment Initiative. The first one will be in March next year in Globe in Vancouver, in Canada. Then we have the first summit that is fully dedicated to the P80 group topic in April in Washington, DC, the Global Solutions Summit. We have in May in Basel, in Switzerland, the Global Infrastructure Basel, where we will have a panel about this topic as well. And then the next year's Later Stage Award will take place in Switzerland, and there we will also have a full topic of the P80 integrated to see what we were able to achieve in 1 year. With this, thank you so much, and I would like to join us now on the stage with Eugene Noon. Thank you.
Thank you very much. Good morning. My name is Eugene Noon. I've come from Korea. Actually, I nearly didn't make it here because my first flight from Korea, which comes only once a day, and I think 3 times a week, was canceled. But fortunately, they put up another plane, and so here I am. I'm delighted to be here. Unfortunately, I didn't prepare any slides. I thought that on a lovely stage like this, it would be much better for me to be the main show rather than put something up on the screen. Okay. I am with the P80 Group Foundation, and Chris asked me to say something, tell a little story about how P80 began. Okay. So as most of you who have children know, a good story needs a prince. Okay. Our story has a prince. It is Prince Charles from Great Britain. He lives in England, but is called the Prince of Wales. Strange. He was doing very well, but there was something that bothered him. He was very concerned about sustainability, and he said, what we're doing is not really sustainable. And in particular, climate change is becoming a very worrisome project. And he said, what can we do to try and combat climate change? And someone said, we need money. So he said, where's the money? And some smart person said, pension funds have it. Okay? And someone else said, sovereign wealth funds have it. So when we looked around, that was indeed true. about 20 to 30 trillion dollars are being managed by pension funds and sovereign wealth funds from around the world. So the good thing about being a prince is that you can have nice parties, invite people, and sometimes they come, sometimes they don't come. Okay? With pension funds, these are managers of huge sums of assets, and the important ones don't really like to come, unless, of course, an important prince calls them. So back in 2007, there was an important meeting, and Prince Charles chose, I think that he was only able to get 8 of the largest pension funds from around the world, and said, let's call it P8, P for pension, and 8 for the 8 members that had come to speak and discuss climate issues at his home in Clarence House. Now, what began as a very informal club, a discussion session at the prince's home, grew, and pretty soon P8 had more than 13 members. Korea, where I come from, has one of the largest pension funds in the world. It's the NPS, we call it National Pension Service, managing, as Chris pointed out, $350 billion. And it keeps growing not because the managers are very good, but because the demographics have it that it will grow. And they have a monopoly on the Korean economy for the pension funds. So we joined, and I went to the party and was sitting next to Prince Charles, and he said, 12 is not really very princely. Okay? He said, what can we do? And I think I had drank a little bit too much wine that evening, and I said, why don't we make it 80? Put another 0 behind the 8. And he said, that's a good idea. Okay, go ahead and do that. So I was given the responsibility of trying to change 8 into 80. And we held an important meeting in 2010, which marked the beginning of our move towards getting 80 and hopefully 800 pension and sovereign wealth funds. And that was a summit meeting in Seoul, Korea in 2010. What are we trying to do? Okay? Actually, we began by talking a lot and worrying a lot. But at some point we said, we need to try and mobilize the large amounts of capital that we have in these funds into projects that require capital to combat climate change. And when we looked at the situation, we said the battle for climate change is going to be won or lost in probably Asia, more specifically China and India. And we said, let's try and channel as much capital as possible into the emerging markets. So that was our first goal. What we found out, however, was that there were huge problems. It wasn't just 1 or 2 barriers that was stopping money flowing from the large pension funds into the projects around the world. There were many, many barriers. And when we studied the issue, we realized that to solve the problem, we needed to do actually a very complex analysis of a complex problem and to try and solve it simultaneously. So those of you, and there are many engineers and scientists here, you know that sometimes it is not enough to fix things at the margin, and you need to make wholesale changes. So that's what we're trying to do, and we said we need to design a new financial plumbing system. So trying to get large capital to flow into many projects. This kind of plumbing system is not going to be achieved by large pipes coming down, but we need to start with very large pipes because that's where the money is, but then make it flow into the small projects, into companies, into assets, into development ideas that you are all working on. So we think that this is going to take quite a long time, but the good news is that it is already starting to happen. What we did was we talked to some large development banks, such as Asian Development Bank, African Development Bank, IFC, World Bank, and so on. And we shared these ideas with them. We shared the vision. And the good thing is that already IFC has started what is called the Climate Catalyst Fund. So that is up and running and making investments. It's a fund of funds, so that fund gets money from large pension funds and other institutional investors. They put their money into fund of funds. The fund of funds will then put money into private equity or venture capital funds. These private equity and venture capital funds will then put money into companies or into projects that you're working on. So this is a simplified view of what we think is going to happen, but our vision is to try and go top down where the money is to where it should go, and to try and build a system that would make it very efficient for you to get capital. It's not going to happen overnight, okay, but I think the start is there. The other element that we've been looking at is something called the Global Technology Deployment Initiative. That's GTDI. And actually, I'm standing here in place of Mark Grobmeier. I think on the program, you're supposed to be listening to Mark instead of me. He had some problems with his family issues at home, and so he asked me to speak on his behalf. And the GTDI initiative is actually an idea that is closely linked to the P80 Group Foundation, and that is we work rather than top-down, bottom-up. So what the GTDI would do is look for good technology companies, such as yourselves, and then try to work with you and try to find new markets, which is exactly what Chris was talking about. Try to find new markets, especially in developing countries, because some of the technologies are most needed and be deployed in the developing countries. As you know, that's very hard to do. The small companies, the technology companies may be very good in their local region or may be very good in their technologies, but many of them lack the network, they lack the knowledge about new markets, and they don't have the money to put together large marketing teams to make this effective. So what we're trying to do is work with technology, work with companies like yourselves to showcase exactly what you can do and to match it up with different markets as well. Now, GTDI has an important initiative in Little Rock, Arkansas, where they're going to put together a large permanent exposition of developmental projects of high technology with clean technology, so that rather than you would go and show your technology at some convention and then have to fold it, take it away, move it to another location, what the Little Rock, Arkansas effort would do is have a permanent expo site where some of the best technologies can be showcased every day of the year. And we will fly in people from all over the world, Africa, Asia, Latin America, Europe, of course, to show them exactly what is going on. And in that way, we can make our ideas more real to everyone. I'm delighted to be here. And yesterday, we had an important signing between the GCCA and P80 Group Foundation. I believe that we have a lot of work to do together, and the collaboration, I hope, will be most fruitful. I'm hoping that in the course of today, I will meet many of you, and we will have a chance to discuss these things in much greater detail. Thank you very much.
All right, excellent. So exciting. Thank you. So next we have, if I can open my iPad here. There we are. Now, I could bore you with renditions of all the bios of the people who are going to be on our panel, but instead I'm going to have them come up and give you a 4-minute spiel on who they are and the topic, the perspective that they represent on this panel. First, we have Todd Nelson. He's the manager of the venture support. He's manager of venture support at NextEnergy. Todd?
use this.
Yeah, before I begin, I'd just like to thank Nina and the entire Global Cleantech team for hosting me here and inviting me to talk to you today. I'm very excited to be here. So I'm coming from Detroit, Michigan, and specifically NextEnergy, which is Michigan's cleantech cluster. So NextEnergy is a nonprofit that was funded in 2002 by the Michigan Economic Development Corporation, with the goal of accelerating advanced energy technologies and innovation through clean tech and energy in the state of Michigan. The motto of our organization is "Ask us what's next," and we believe that really defines our ethos and our spirit, where not only are companies bringing technologies to the stage and to investors and to the market, but also we are trying to understand what's happening with trends and markets and technology developments in Michigan and then also across the globe. So our cluster is composed of many large organizations. So you can see here the big three automotive and then a variety of their tier 1 suppliers. We also have a group of some of the best research institutions and universities in the state. Also in our cluster, we have investors, both in the state of Michigan and throughout the United States and abroad. And finally, we have a lot of the regional nonprofits and NextEnergy's main funder, the Michigan Economic Development Corporation. And I would be remiss if I didn't talk about my babies, the startup companies that we have in our network. We have over 60 startup companies, and a lot of these companies are focused in automotive-related industries, for example, energy storage, power electronics, and vehicle charging. But we also have a wide variety of companies in sectors like energy efficiency, building automation systems, sensors and controls, and solid-state lighting. And then we have a variety of companies that are bringing crazy designs and crazy new technologies to the table. And it doesn't really matter what sector as long as it's focused on clean tech. Now, the one thing that all of these companies have in common is that they're all looking for access to funding. That is their most critical need. And NextEnergy has been successful in helping them raise some of that seed funding. So over the past 2 years, we've generated around $115 million of new investment into companies, early-stage technology companies in our state. Now, our cluster strength has been helping these companies secure research, development, and demonstration seed funding. But one of their unmet needs is follow-on funding. And that is one of the biggest unmet needs of our cluster, and one of the reasons why I'm here today. So for follow-on funding, our companies have 3 main options. They have venture capital firms, they have corporate strategic investors, and they have government, whether that in the US is state or federal. Now, all of these options have limitations. Venture capital is impatient capital. It often requires very high returns, and then it's averse to capital intensity or capital-intensive investments, which a lot of the companies in our cluster are. For corporate strategics, the limitations are that the companies often have to be in line with some of the corporate priorities or an existing or a hoped-for product or service portfolio. And then government funding is not always aligned with industry needs and timelines. And then it's also very unpredictable because of politics, which if you've been following anything in the United States recently, you'll realize how unpredictable of a funding source that actually is or could be. Now, the question that I'm here asking today is, what is the role of institutional investment in follow-on funding for early-stage technology development companies? And could, for instance, pension funds be interested in this kind of investment? And if so, I've got a series of questions. How early in company development would pension funds be interested? At what scale of capital would they be interested in investing? With which partners? Would they be interested in, and have they already partnered with corporate VCs? Have they partnered with venture capital firms? And then at what level of risk and at what level of return? So the ultimate question that I'm bringing here today on this panel is institutional investing only for what's now? What has already been de-risked, what is already in the pipeline for deployment, or could it be for what's next? Thank you so much.
Thank you very much. Next, we have Markus Lampinen. He's senior partner at Grow VC Group. Markus, and then Chris and Eugene, you can also come up and sit up here in the panel. Thank you.
All right. Thank you, Lisa, and thank you, Nina and Chris, for having us here.
Great to see
So
you,
my name
gentlemen.
is Markus Lampinen. I'm the senior partner and one of the founders of the Grow VC Group. We're a group of companies pioneering new funding models, crowdfunding, different securities marketplace, online marketplaces with equity and debt applications. We believe that crowdfunding is very vast and that the internet has had a minuscule impact on the financial markets to date. It's mainly served as a distribution channel. Through the Grow VC Group, we operate on a global level, applying these new online models to various industries. We have 4 operating companies within our umbrella. We have 9 strategic investments and partnerships, and we have 1 acquisition in this space to date. So we've been quite active since we started in 2008. We believe that the internet will start to shape the value chain of the private securities market, and we've been seeing this happen already since we started in 2008 and 2009 on a global level. And on a global level, it means that we started out of Hong Kong. We grew to over 100 countries in various different roles in the markets. We've been active in China and India since 2010. So what does crowdfunding mean in various circumstances? Let me first give you a couple examples of different sectors that we see. And my role, essentially, in what we do is I manage our US operations. I'm based out of San Francisco, but also having the visibility on a global level gives us a lot of in-depth knowledge in terms of what's actually happening out there and what are the applications. The number 1 sector of assets that we see affected by crowdfunding and the internet's impact is private securities. These private company securities, these refer to early stage companies like startups, and that's been the public discourse. But we tend to gravitate a little bit up the value chain to a little bit later companies because of the structure and the information that you actually have in those stages. And these companies can be in various sectors. Then the second one is real estate. We see that real estate is becoming a very, very big application in this space, mainly diversification. And all of the sectors that we work with mainly relate to sophisticated, institutional, high net worth individuals or, for example, family offices. So we very rarely kind of talk about a very, very early stage or very small commitments. But even in the case of real estate, a sophisticated investor can get a lot of value by being able to diversify, for example, out of Southeast Asia into European capital property, starting at a very low threshold, let's say $5,000. The third sector, and also one of the reasons that I've been part of this dialogue, is that we see a lot of applications in renewable energy sources. There's a lot of demand in the market to get access and efficiency and transparency into systems, and people want more control over where their money actually goes. So we see a lot of niche operators, niche marketplaces emerge in the global market where renewable energy and different technology around more sustainability and efficiency in the market is being supported at earlier stages. In short, as we're talking about larger capital deployment, this is all relatively small. So the largest investments that we see are up to maybe 100 million, which is significant, but most tend to be around 5, 10 tops. But at the same time, the structure is around how to handle this type of efficiency, especially if you're raising capital for, let's say, 2 or 3 million, then the actual strain on the system is very, very severe. So you have to make sure that you have very little margin for error, very small transactions cost, and a lot of efficiency in the system. And that's our role in essentially creating these new marketplaces and seeing this have an impact. We've also worked with co-investment models, different ways of deploying capital using this information. We have a case in London City, a pension fund advisor and manager, a consortium of these that essentially work in this space that we see as a very interesting benchmark for larger capital deployment using more efficient online marketplaces. So that's a little bit about my background and how we are here. And I look forward to continuing the dialogue. And we see that there's a lot of benchmarks that can be applied from these newer marketplaces into also other areas of this financial plumbing, as Chris calls it. So thank you.
Thank you, Markus.
And finally, last but certainly not least, I'd like to introduce to you Shawn Lesser. Shawn is co-founder and partner of Watershed Capital Group, and he's also co-founder of the Global Cleantech Cluster Association.
Thank you. It's great to be here in Finland. I'm a big fan of Finland. I've been to the FinFest. The Finns are the toughest crowd, I tell you. The Swedes cracked up about this. I love moomies. And when we were coming back to Finland for the second time, I asked Nina. Nina is my best friend in Finland. What are we going to do? And she promised me that me and her are going to go to the sauna tomorrow, which is nice. But then I found out that there's like 10 other people coming, and I was a little upset. And then she's talking about this stick that you hit people with. Okay, great to be here again. Thank you. Thank you. Thank you. Thank you. Thank you. But maybe a little bit about our firm, and we're a co-founder of the GCCA, along with Chris, Nina, Peter, Ben, and Lisa Ann. So we're super excited to see the growth that we've had in the association, and it's great to have this new initiative with the P80. That's tremendous, and Chris has done a tremendous job putting that together, so I just want to thank Chris for doing that. So that's one hat, and then the other hat, I'm a co-founder of the Watershed Capital Group, and we're a niche investment bank focused in the area of impact and sustainable investments. So what does that mean? Specifically, what we do is we raise money for companies under that umbrella, which includes Cleantech. We've raised money and worked with over 20 companies. And then the other side of the shop, and more important for this conversation, is we also work with funds. We've worked with over 60 private equity and venture capital funds from Europe to the US. And we were also, just first week in October, we're working with the US Department of Commerce. We did the first impact and sustainable trade mission to Europe. So we took 10 funds and introduced them to about 100 investors in London, Zurich, and Amsterdam. And then we will be doing the same event in Scandinavia on May 17th. We'll go to Oslo, Stockholm, Copenhagen, and Helsinki. So we'd love your support on that. So I'm excited to be part of this panel, and it's really great to be here. Thank you.
Thank you, Shawn. So to get this topic started, Eugene, I'd like to ask you, could you give us an example of sovereign wealth funds or pension funds investing in clean tech today before we get started discussing this more?
Okay. Before I give a specific example, let me give you a general outline of what is going on. We did a very small and informal survey with pension funds that met at Clarence's house with Prince Charles. And this was in 2009. We asked 12 of the largest pension funds who were very interested in climate change issues exactly how much they're investing out of their total assets into what they want to call green. So you could call green whatever you want it, define it any way you want to. And very surprisingly, even the most ambitious of the pension funds were investing less than 1% of their total assets. So this is a very small amount. And this is when we realized we need to do a lot more to encourage pension funds to get into this space. I think the situation has improved a little bit since then, but I would not be surprised if it were not a big change. Okay? So there's a lot of work ahead of us. An example of how a pension fund worked was, I think Shawn is working with SEAF, S-E-A-F group, a very nice group of pension fund investors, private equity investors, and interested in sustainability. What they did was they worked with Peru's pension funds to do some investments in Latin America, especially in Peru, and they ran some investments into mini hydro projects. They accumulated several assets, and within 3 or 4 years of establishing these projects and getting them up and running and operational, another group came along and wanted to buy these assets. So the investments were made at early stage, and the exit was made very successfully, giving a large return to the pension funds that had invested. So this is an example of how things can work, but you need very good fund managers, such as SEEF, to go and work this terrain out properly.
So we need fund managers. What else, and I'm going to open this up to the panel, what else do we need to move these pension funds and sovereign wealth funds forward? Chris or Shawn?
Well, what you're seeing in Cleantech, unfortunately, is, well, it's just changing. So there's less and less pure Cleantech funds. So we raise money for funds. We're kind of the canary in the coal mine. So this isn't my personal opinion. This is just what we're seeing. So I think it's transitioning more to specialized funds. So you might have an LED lighting fund. You might have an energy efficiency fund. But just having a broad brush Cleantech fund, the world's changing, right? So, and Eugene said it before when he was giving his speech, it's the big fish to the small fish. So you have to package it for fund of funds that a pension fund will invest in. A pension fund's not going to invest in an individual fund. They need fund of fund managers that are going to work for them.
I think actually this is on a bigger, when I look from a very distance, you know, Shawn and I had this discussion, so we have like less Cleantech funds on the one hand, but we believe, you know, this is also a sign they get way more specialized, and this for me is then also the link to, it's like the big scheme, you know, like the big utilities, they get smaller. IBM, when they started, thought about we'll have maybe 5 or 6 huge computers worldwide, and then we actually buy time. And now everybody has like small computers in their pockets. So I think also here we see a similar, it's an overall pattern. And this is why I'm so excited that Markus Lampinen is here, because I see also in the funding space, this specialization will go towards like these small entities. And I think that's also your experience that you have when you talk with pension funds.
Yes, that's definitely right. And with the decentralization of energy and energy projects, then essentially it's becoming a lot more accessible for various different audiences. And that might be very early stage. So as an example, we see a lot of, for example, business-to-business or peer-to-peer lending for asset-backed loans in the renewable space, for example, with solar panels. Because one solar panel or a million solar panels, they're kind of fundamentally quite the same. But at the same time, we see that a lot of the institutionals, they're kind of starting to gravitate around this space in terms of how does this new phenomena that's happening affect them. And for example, peer-to-peer lending, it's already grown up to the stage that it's significant enough. So in the US, we're talking about several billions of dollars of loans. We have asset managers there that might manage, like Chris mentioned, $400 million of these loans. In the UK, it's over several billions of pounds. So it is getting to the stage that some institutional, some funds of funds are going into those markets, and they're looking at those as how do they get, kind of, very, very selfishly, how do they get better yield and better liquidity from those? And we see that as there are sector specialists that emerge, for example, around Cleantech and different organizations, like, for example, SEEF and people that really understand the space, then they can play a large role in making sure that the deals that they source, they essentially are high quality. But how do we then create that and kind of bridge that gap to larger capital deployment? That's really kind of what we see as the big opportunity in that space. And we see a lot of the kind of earlier stage plumbing, it's already being done, and the mechanics of those and what exists there, that can be, if not directly, then at least as a reference leveraged for larger capital deployment as well.
Yeah, and one of the questions that I have, looking at it from the perspective of the Cleantech companies themselves, is of these funds of funds, what percentage is being invested in traditional VC that will be investing into Cleantech companies versus the actual deployment, right? So how much is looking at taking one solar panel and turning it into $1 million in a utility size solar farm? So what is the breakdown, coming from the perspective of pension managers, fund of funds, how do they break down between those two groups?
Todd, I think with the fund of funds, there is a trend going away from doing pure fund of funds ideas into doing exactly the kind of work that you've pointed out, which is to go into the projects themselves. And their specialty is not that they can find good projects to go into. They will work with other private equity or venture capital firms, and they will be a co-investor. So they don't have the expertise, they don't have the network, they don't have the people to go directly into the projects. And this is true for all of the pension funds as well. So these large funds, fund of funds and pension funds, sovereign wealth funds, they rely on the VCs and the private equity and other specialist fund managers to source the good deals and to present it to them.
So what type of credibility are these funds looking for? What are the characteristics that they're looking for to make these investments?
Let me try to answer that. From the pension side, when they put money into situations, I think the biggest thing for them as of today is to make sure they don't lose money. Okay, so the last financial crisis was a traumatic experience, and right now controlling risk or controlling damages is very important. Unfortunately, Cleantech did not do very well as a class or as a group during the last several years. I think what happened was that many funds, there was too much money chasing too few companies in the clean tech space, and the prices were bid up. As the bubble burst, what we saw was that a lot of companies went bankrupt, and a lot of the investors suffered as a result of that. So there's a great deal of nervousness, and now is a time to regroup, and they're saying, we would like to go into very trustful, very reliable, very steady situations, something predictable. It's easy to say, but from those who are putting together new technologies, who are trying to do innovative things, this is really working against you, unfortunately.
And I can see how bundling like projects together could help to reduce that risk, and keeping the investments very focused, say, on LED fund or an energy efficiency fund or a solar fund, could also help to reduce that risk and help to increase the credibility of the fund. So let me open this up to the panel. What is the likelihood that sector-focused pension funds can partner with large strategic corporate investors to co-develop these funds? Chris?
This is actually, I think, one of the big questions that we work on. But that's why we're also so excited, you know, that the Cleantech Venture Day in Lahti now became the corporate Cleantech Venture Day. We think it's an extremely important development because the large corporates, they have their global networks. They rely on innovative young companies. They're more like the go-karts, and the large companies are like the big gorillas. They know what to do. So I think when we have the large corporates and we're able to then actually engage with them also on the pension fund side, you know, we hope that we see a lot of co-investments happening from there, because it's like de-risking both parties. And what we can help with GCCA, you know, what our advantage is, like, we have a trusted network of cluster managers, so we can rely on inside stories. We don't have to read the news, or we don't rely on the marketing pitch. So we have the inside story, and we have with the Keystone Compact a method to really check the investability. And I think with this combination, we can really build something that has not been here as of today.
But I think the question in my mind is, so many of these corporations already have internal finance arms that are driven either by bonds or that are driven by revenues or the internal financing. So the major question for me is, do pensions play a role in project development with, for instance, Siemens, or do they play that role, or is that all internal? So how open are corporations to partnering with pension funds, and do we have examples of that? Because I think that if we had examples, the cluster managers, then we would be more effective at sourcing deals, because then we would say, well, this is a common model. This pension funding is a common model of leveraging capital that is different from your traditional means, but has already been de-risked.
You know, I see that we are about to see these examples coming up, and it's going to be in very proven and not very sexy technologies first. For example, the street light. You know, this is not that attractive per se, but it's a very proven business case. You know exactly how to develop these projects. You know, we have with Nancy Clanton here, someone that knows really a lot about lighting and what can be done with that. So we know how to do the projects. We know that we can save the 90% of energy. We know when the payback is. We know actually the return rates. So this is all facts proven in like hundreds of projects around the world. And when we have GE or the big companies in lighting, they invest in that. I think they will be very open to partner with pension funds. You know, when we bring the right people together, not all will play with all, but this is the advantage we have now with the P80 Group Foundation. We can try to actually bring we only need 2 partners that like each other. And then we have a project. And once we have this project, we can prove the model. And as Nina said, you know, like with Veolia going now this step that I appreciate a lot, you know, in this innovation space, we don't know the solutions yet. We will make mistakes, but we're very open to learn on a very high level. And this is for me very encouraging. So I think we will see very concrete projects like this in new partnerships happen very fast.
Yeah, one of the things that tech companies can do more of is to try and encourage project developers to work with them. For example, we talked about GE, Siemens, and so on. In Korea, we have very large companies like Samsung and Hyundai. And of course, the pension funds want to work with them, but they're not going to work directly. What we need is a middle person who is going to bring them all together, coordinate it, take the first risk in the equity side, and to develop the project. And if you can bring good partners together, as Chris mentioned, then you have a chance to get pension money as well as the large corporates to work together, and the big debt providers such as Citibank or JP Morgan as well. So I think the big players can come in, but the thing that the clean tech companies can do is to say, here's my technology, you need to use my technology into these situations, and then get a very good developer to come along and develop that project. You can't do it yourselves in most cases, but the interesting situation will be the real assets that can be invested in by the large institutional investors.
And one thing, as municipalities, for example, can submit these in a standardized format, you can have the vetting process in a very, very efficient manner. And this is something that we've actually seen starting to happen with pension fund advisors and pension fund managers, because they have a very convoluted process in terms of how they go about acquiring more information, kind of going back and forth with the projects in terms of what they actually need to sign off. They'll have an independent audit, they'll have various different things. And these aren't early stage, but the process is very complicated. When you get into earlier stage projects, then you have less information, you have less structure, you have a lot of different uncertainty, a lot of variables. So making that into something that you can start tracking as early on as possible, that increases the likelihood of participation by larger capital deployment from pension funds, but also from strategic partners. And one thing that we've seen in the market, especially for project financing, the bank's roles with the recent crisis, it's also diminished quite a bit. That we've seen a big deficit in terms of the lending that they're actually able to provide. And we see that as an opportunity for business-to-business lending in these spaces, because you have corporates that have a lot of capital on their balance sheets that they could utilize, maybe in a little bit of a different manner in terms of getting involved with these projects. But our visibility and our viewpoint is, if we can include more people in the dialogue earlier on, we can also create more of a sustainable system where essentially we generate more information, which quite frankly hasn't really existed to date.
So let's just take a contrarian view. Where there's obviously people who may be disagreeing with this panel on how this is all going to work. So what is the skeptical view? What are some people saying about this idea that it might not work? Shawn?
I'm not sure if the corporates and the pension funds are going to be working together. So we just got back from the trade mission in Europe, where we had pension funds from Shell and pension fund from Shell and APG, the Dutch pension funds. And I've never really seen, to your point, do they have the same goals? Do they have the same objectives? What is their fiduciary responsibility of a pension fund versus the fiduciary responsibility of a corporate, right? A corporate could take risk, but a pension fund will be more risk averse. They have more people to answer to. than the pension fund. And just on a different topic, what we're also seeing from doing the trade missions is a rebranding away from Cleantech. Cleantech is kind of more towards impact investing, which Cleantech is underneath that umbrella. And you're seeing the Obama administration has an initiative around impact investing. The G8 has an initiative of impact investing. They're all related to Cleantech, but it's also kind of changing the vocabulary a bit. So I go back to the original question. I think it's challenging to have those corporates and the strategics. I don't know if they play well together.
I think one restriction is on the legal framework side. Like a pension fund has to operate in a very narrow field. It's a very strict rules that they have to follow. So I believe personally that we need some bottom-up pressure to actually show the pension fund managers, but also the legal entities around it, that the people want more money in the space of sustainability. In Switzerland, we work on an initiative, that is called My Money. Me personally, so when I put all my money, all my life into a pension fund, and I have no say where it's going to be invested, and I even the risk that I don't really get it back when I'm then retired, that's not really a good proposition. So I think a lot of people are actually seeing that they have to be more active, and I think we need this bottom-up pressure. But overall, I think when I look at the challenges where we are today, when we started GCCA, no one thought. Everybody told me, clusters will not collaborate, they compete. Now we have 50 clusters. We know we want money towards your companies, we want money towards the Swiss Cleantech companies, but we can grow the market together. So our idea worked. When we started discussing even with the Swiss Cleantech team, when I first told them, we're starting to work with maybe P80 about this topic, they said, Chris, you're crazy. This is never going to work. And when I called Mark Grobmeier, when he called me the first time and he said, he talked to Bill Clinton, to Al Gore, to Prince Charles and Richard Branson, and they think that's a good idea. I thought like, wow, these are big names. Is he really talking to them? Does he really know them? And if he knows them and they think it's a good idea, these are smart people, so we're probably onto something. When I told my Swiss Cleantech team about it, they said, you're full of bullshit, sorry for the word, but this is not true. And now we have this collaboration and Eugene is here, so it's real. So I think, we will see things in the future that will change that we can imagine as of today. So that's kind of really my hope, because a lot of people realize we have to do and we have to act fast.
Lisa, allow me to go back to your question. What are some of the criticisms and what are some of the problems? When you look at any fund really, but pension funds and sovereign wealth funds are a good example. And they are looking at reward versus risk. Okay, everyone knows that. So what are they allowed to invest in? They can invest in something that has very high reward and low risk. That's the most preferred one. Okay, they like these days low risk and low return as well. So even if there's low return, as long as the risk is pretty low, then they're willing to go with it. So utilities and so on are good examples. They are also able to do high risk, but they require high return for that. So venture capital investing would be one of those. So that leaves only one other choice out of the four combinations, and that is high risk and low return. That is something that fund managers hate, and that is something that pension funds and sovereign wealth funds will not want to touch. Where is Cleantech in that overall matrix? Many people, many fund managers believe Cleantech, because there's the word clean in front, which is not nice from an investor's point of view, and we'll talk about that later, but also because there's the word tech in there, which seems to connote a lot of risk. Unfortunately, many people think clean tech is high risk, low return. Okay? So I put it as a challenge to people here, especially to the floor, that you need to do something, and I can expand on this a little bit later on, but you really need to do something to change this image of clean tech. Make it not high risk, low return kind of investment. Personally, I don't think it is, but that is the label that is falling around clean tech at the moment. Most unfortunate.
And it seems to me that I agree with you that gaining greater visibility for the successful projects that have what they've achieved to date is what's probably most needed around this. And the more education the market receives around these case studies, then the more likelihood people are going to be able to make the decisions for their own pension funds and sovereign wealth funds. Unfortunately, that's as much time as we have for the panel. So I'd like to thank you very much for being here. Let's give them a round of applause. Thank you so much.